Hi everyone, hope you're all doing well. Today I'm going to do my UK portfolio December 2024. So this is the updates that I do on the YouTube channel every 3 months, so you get to see how my UK portfolio is doing. Any positions I have are in this portfolio, so you can see what I'm up, what I'm down. It just keeps all that transparency so you know what is going on at the moment. Now, since I did the last update on the YouTube channel, the portfolio has moved a little bit. The reason why it has moved is because we had the budget in October and the current UK government, the market is not liking the current UK government, and it definitely didn't like the budget as well. So because of that, some of these UK stocks have taken a little bit of a whack since you have last seen it. So bear that in mind. That does mean I've been quite actively as well buying a few UK stocks. And as well as that, this UK stock portfolio is quite dividend based. So when I talk about some of these stock prices, I'll also give you a bit of a hint of how much I would be up as well if you include the dividends on top as well, which is pretty key when a lot of the returns come from the dividends as well. So I hope you enjoyed the video, guys. Hit the like button. All this stock price, I'm currently recording this at 7 AM on Monday, so these are all the prices taken before the market opens up on Monday, before you guys see this video. So hope you enjoyed the video, guys. Hit the like button, let's get started. Now, like I said, I do these video updates every 3 months on the YouTube channel. If you want to see it every month, I do an update every month on the Patreon. To join that, link is in the description. £5 a month, you get 2 exclusive videos a week on there, know what I'm buying and selling in real time, and as well as that, you get a Discord with 500 members on to talk to in the JKR community, including me. Links in the description, guys. £5 a month. And if you want to get some free fractional shares from Trading 212, join the link in the description. That's personally the investing platform that I use and buy all these stocks on as well. Let's get started. So the UK portfolio, this is how it's going. It's going okay at the moment. Like I said, it was a bit better before the current budget. A lot of stocks were up a little bit more, but at the moment it's having a bit of a pullback. But that does mean I'm quite actively buying some of these UK stocks at the moment. Starting with the top one, Aviva, we're up 20% on that one, including dividends as well. We're actually up a good 30 to 35% on Aviva. Plodding on nicely. They came out with a trading update, I think it was about 2 weeks ago. It looks really good for Aviva, and yeah, I'm really happy to just keep holding it, getting that dividends, and I think it's one that if they were potentially to be acquired, it could look quite interesting. But saying that, I think they're rumoured to acquire Direct Line, I think, so maybe they're not going to be acquired anytime soon if they're currently acquiring someone else. Next one's Airtel Africa, so we're up about 3% on this one. This has had a bit of a pullback. Once again, including dividends on top of this one, we're up about 15-20% on Airtel Africa. The problem with Airtel Africa at the moment is it actually used to do really well. Good amounts of revenue growth. Let's go on past performance here. Good amounts of revenue growth, good amounts of profit growth, as you can see here. They were throwing that into a dividend, but there's been a bit of a drop off at the moment. Now, the drop off itself isn't actually financial related. What they have to do is they have to recognize the weakness because they operate in Nigeria. The Nigerian Naira, which is the currency in Nigeria, has been devalued massively, and then they report in dollars. So because of the devaluation, it looks like the numbers are really poor, but that's actually what's kind of going on here in like the last kind of year. Now we're starting to see the Nigerian Naira kind of start balancing out really in the last year-ish. So by the time we get to about February time next year, which obviously isn't too far away, we would have overlapped the big devaluation in the Nigerian Naira, and then hopefully we start seeing the financials come back, as you can see what is forecast here. And if we start doing about what is forecast at the moment in 2026, which is 562 million of profitability on a 3.9 billion market cap, is pretty good and very attractive. And when we take out the devaluation, this company should grow at like 10-20% as well. So hopefully, yeah, we start seeing Airtel start kicking on from what has seemed like a very long time that currency has been devaluating for. B&M, we're down 10% on. That's a relatively new position. I've been very aggressive adding into B&M, as you can see here. I like it. I like B&M. I was listening to Paul Scott the other day, and he was saying he likes B&M at the moment. He's going to have to take another look at it. He likes the value. It's a good retailer. Very good profit margins for retailer. And the stock is basically down where the Liz Truss budget was and where the CV levels were, which kind of shows you how far it's dropped. No, that's a reflection of how low the valuation is, but it does kind of point out the amount of fear that's in the stock right now. Since 2020, the stock has doubled its revenue. Is it doubled its profit, doubled its revenue? And the stock has basically not factored it in at all. 10 times earnings, 8 times forward earnings, 4% dividend yield. If it does pay a decent special dividend, you're looking around about 7-8% yield on this one as well, unless they do some share buybacks, which could be another option depending on how cheap the stock is right now. And yeah, it's obviously got some concerns at the moment because of the minimum wage impacts that's going on. For me, it is priced into the stock because where the stock has fallen off is kind of looks like it's priced in some negativity here. So yeah, I like B&M, and I've got plenty of videos on that one, so I'll keep it nice and brief. Bright Developments, we're down 8% on. This has had a really tough kind of couple of months. It seems like a lot of house builders at the moment. There was the initial excitement when the current government did come in and they did rally up. Since then, it's given it all back and gone lower. I think the fear is that actually the housing recovery that we thought we'd start seeing isn't going to happen because interest rates have been cut. By the way, what's this image got to do with interest rates? I don't know. Maybe it's people spending less. I just thought they could have done a better photo than this. But yeah, the interest rates are feared not to come down as much because inflation is now expected to rise because the current government are forcing a lot of businesses to put up the prices to cover national insurance costs. So because of that, interest rates are going to get cut slower. That means the housing market is probably going to recover a lot less. And yeah, because all the knock-on effect now has made people originally thought, oh, Labour are going to build more houses, and then they thought, hold on, but no one's going to buy them if the interest rate is still going to remain high. So yeah, a bit of a stall on some of the UK house builders at the moment. K-Box, we're up about 9% on K-Box. This stock has actually had quite a sneaky year. This one is actually one that's not really been affected by the budget at all. In fact, it's just continued to rally. Still don't think the valuation is too bad. Nearly 5% dividend yield on this one. Same again, if you factor the dividends on top of my K-Box position, I'm probably up around something like 25% on that K-Box position, which isn't that bad. They came out with a recent trading update. I thought the recent trading update was really good. In fact, I added in on that trading update. So when I do the UK stocks that I'm buying video on Friday, you'll see that mentioned there. And yeah, I like K-Box. Card Factory, we're only up 15% on it right now, which is absolutely crazy because I think at this point here, I was up 100% on Card Factory, and then it's fallen 37% during that time frame. And as you can probably tell as well, you know, if I've gone from 100% up to where I am right now, I've also done a lot of averaging up on the position as well. So yeah, I've been buying quite a bit because I think 7 times earnings, 6% dividend yield is pretty good for Card Factory. Obviously they had some concerns around the recent update that the costs are impacting them, and hopefully they scale up them the situation so they don't have to have the big impact from the profit point of view. Hopefully they pass a lot of that on to the consumer. And we see a strong H2, and the stock does rally from here, and all these buys are worth it. I don't know if we're going to see some form of update from them. Sometimes we get a Christmas trading update, so we'll see if that does come. Eurocell, we're up 24% on that one. Not really much to say with Eurocell at the moment. Jet2, we're up 70% on Jet2. They just came off a recent update as well. They've had a pretty good year as well, Jet2. They've continued to rally as the year has gone on. Good summer period, and the recent earnings as well were really good. So happy to just carry on holding Jet2 at the moment. Gaming Realms, we're up 6% on Gaming Realms. This is a stock that I just don't know how it's this sort of value. I just don't know. You know, it's 16 times earnings. I think it's like 11 times forward earnings. The recent earnings, they came off 17% year-over-year growth. I mean, at least you talk about trading at like 20 plus times. This is like normally a premium company, 20 plus times earnings. And then the fact that this is going to be down at 11 times earnings very soon, and you're going to be growing nearly 20%. I just think that this could shoot up out of nowhere. I don't know how. I think it's even down year to date. No, it's up 2% year to date. I just don't know how when you're growing at when your net income's up 31% and your revenue's up 17%, it just doesn't make sense. I'm very aggressively adding into that one. Greggs are up at 86% on. I always keep thinking about selling out on my Greggs position, but I was literally thinking it the other day. And on my lunch break, I went into Greggs and I was queuing out the door and I thought, hold on, why am I considering selling this stock? Obviously I've sold half of it before, I locked in 100% return, but I was thinking, why am I considering selling a stock that is still so busy where there's the demand where people are queuing out of the door? It was on the morning one day and it was also on the lunchtime period as well. I thought, no, I've got to keep this in here because it's still very much in demand. Holy Ball, we're up 72% on. This one's had a bit of a pullback as well. Probably some concerns around their NI at the moment as well, but still doing very well for us. JD Sports, this has took a whack. Obviously, we had the trading update the other day. I have no idea why the stock fell that much. It shouldn't have fallen that much. Basically, they said they're going to be at the lower end of the guidance. And then the market decided to really sink the stock. And that's already off where we've seen the stock fall massively because of the budget concerns. And all what was a pretty good year for JD Sports has just totally vanished. And I just don't know why it's completely collapsed. Because you look at, I think it's like 8 times forward earnings. And the numbers they're doing, and you compare them to the likes of Nike, for example. Yeah, it's just... It's one of those that just doesn't really make sense. My only regret with JD Sports is when I was up 30%, I should have trimmed the position and I didn't. That's the only mistake that I have made with that one. But yeah, I might nibble at JD Sports at some point. Legal General, we're down 1% on that one. Same again, a little bit of a knock since the budget, but same again, if you factor in the dividend as well from Legal & General, I'm probably up on that position 30-something%, which is obviously, really good. Money Group, we're down 13% on. Once again, if you factor in the dividend, I'm probably near close to break even on Money Group. Same again, I really like Money Group because I look at the stock, I think that this is like 11 times forward earnings, 6% dividend yield on that one. I think I've talked to you before about this one. Same again, it's kind of near the budget 2022 levels, yet we have so many headwinds where hopefully interest rates start coming in, interest rate cuts start coming in, and then obviously we've got the potential of the energy switching market finally coming back, and that should hopefully help them as well. So yeah, I like Money Supermarket, and even if it doesn't do that well on a share price point of view, I don't know how much lower it can go than 11 times forward earnings, and I'm still going to collect a nice 6% dividend yield. So I've been really aggressive on that one as well. Mobico's been on a pretty good rally. It looks like they're starting to get their act together back on the profitability front, so that's why that one's been rallying. Supreme, we're up 48% on. Same again, this has been very volatile. This has had a bit of a pullback recently, as you can see here. I have been adding into the position though on the pullback. They did make a acquisition over the weekend. They bought Typhoon Tea out of administration, which was rumored earlier in the week for 10 million. Not sure on this one. I know they're trying to get out of the vape space, making so much of the revenue up, and this is one of the ways that they are currently going to do it. But 10 million's not a bad price for it. The only problem is, well, I say it's not a bad price for it, for the brand, but actually when you look at the numbers, I think he's got somewhere down here where Typhoon Tea, what they did last time, so they had a revenue of 20 million, so paid about 0.5 times sales for it, which is okay, but they made a pre-tax loss of 4.6 million. So yeah, hopefully they can turn that around and get that into profitability, but that's obviously not quite far off the profit at the moment as well, as you can see here. And we've got some SL Capital, not much to report on SL Capital. The numbers are still very, very poor, and I'm considering, I'm going to give them, I've wrote on my calendar that if we get to March after the Q1 update and there's still not an improvement on the business, I might get rid of it. I'm kind of hoping someone comes in and buys it and looks at the company and thinks about the revenue side of it and thinking we've got about 1 billion worth of clients here. I just don't, the cost control on SL Capital has been very poor. They've got way too many staff for the revenue that they do make. If this stock was like break even, which I think they should be break even, considering they've got like nearly 80% gross margins, I'd probably be a little bit more happy to hold it, but they're not doing that. So yeah, very disappointed with SL Capital at the moment. YouGov, we're down 32% on. YouGov's really interesting actually. I don't know if I got the I thought I loaded up Stock. Yeah, I have loaded it up on Stockopedia. You can join Stockopedia, by the way, with the link in the description. It gives you 25% off, I think it is. It's very good if you haven't got Stockopedia. But if you look here, I mean, the revenue's been going in the right direction. It's the profit. Obviously, they did a profit warning last year. They didn't get the revenue ramp up that they hoped for, and some of the costs as well. But if they do rebound this year, that's expected, it puts it down to like a forward P of 12. If they hit a forward P of 12 and they're growing at like a good 10% plus a year, yeah, YouGov is definitely not going to be 12 times forward earnings. You're going to be looking at probably like 20 times forward earnings, and the stock will probably double from here. So if I get more confidence and more updates from these guys that they are going to hit it, then it should do quite well. Watches of Switzerland, we have an update from Watches of Switzerland this week. Have I got it up? I feel like I did get it up. So we get the H1 financial year 25 results on the 5th of December. Which is the Thursday. Yeah, we'll see what's going on with Watch of Switzerland. That's a turnaround play for me, and we'll see what's going on. I have no idea where that's going, because obviously you look at so many of the luxury goods here, they are getting absolutely slaughtered. So I will see what happens with these guys, because it doesn't, when you look at some of the other companies in the space, it doesn't look good, but maybe they've already got past the worst of it. We'll see what happens. Warpaint, we're up about 7% on Warpaint. I think the value for Warpaint is very, very good. You look at the valuation it's currently at as well. Sometimes, I mean, look at the recent numbers that they did as well. 24% revenue growth, 67% net income growth. Warpaint, I sometimes do come up with a trading update around this time, I believe. If we just go back to so last year they did an update on the 10th of November. We've not had one this time, but maybe we do get one at some point, just to tell us how the Christmas period is going as well. Same for Card Factory, we might get an update from them guys at some point saying how the Christmas period is going as well. We'll see what happens. It's not guaranteed, but something to kind of keep an eye on there. So yeah, overall the portfolio, yeah, I'm really happy. You know, it's still doing okay after the budget, but you can see that there's some stocks that have had a whack and are going back down to like budget 2020, the Liz Truss period 2022 prices. So I am actively quite buying some of these stocks in the UK market, especially the likes of B&M. I really like Gaming Realms. I really like the likes of JD Sports. I like Money Group. I like as well. So potentially Yugo if they give me a bit more confidence. Warpaint. So there's a good, just 5 stocks there. I'm pretty much really being quite aggressive on. Selling wise, there's no plans to really sell. Obviously I've got my eye on S4 Capital for next year if it doesn't start performing. You might notice ASOS has gone out of the portfolio. I'll update you guys on the UK stocks I'm buying December 2024 about that. That one has gone. The reason why is I just looked at it and I thought, why am I wasting my money here when I've got B&M out there that I really like. If B&M goes and doubles, I make up the loss that I took in ASOS, or nearly most of the loss. So why do that? Why have it there? Go buy B&M. So I decided to do that switch there. But yeah, overall, like I said, it's a very dividend portfolio, this one, and when you do look at the dividends and add them onto a lot of the share prices, they're all doing quite well. I just can't believe how some of them have been whacked. Likes of Card Factory and Supreme. Those stocks were up 100% for us, and look how much. I mean, there's some averaging up as well going on there as well, to be fair, because I'd rather make more money than just the share price gains. Making a large sum of money is more important to me. Yeah, it's surprising when you look at some of the whacks that you do have when you look at that point of view. Buying wise, obviously, yeah, there's obviously, like I've just named you, there's like a good 4 or 5 stocks I'm actively buying right now. There is a new position I'm considering. You guys on the Patreon obviously will know what position that is. I want to do a little bit more research before I do pull the trigger on that stock, but I wanted to do it this weekend, but I was so busy sorting out the Black, and thank you, there was so many of you wanting to join the Black Friday deal. I think there's about 100 of you guys. I was so busy sorting that out and loads of other stuff that I just didn't have time to get that done. So I'm hopefully going to get that done this week, and there might be new positions in the portfolio. I just want to be a little bit careful because obviously there's quite a few positions in there. I don't want to get too diverse, but you guys know I use this kind of tactic in the 2022 stock market crash, and now that we have a bit of a crash going on in the UK market, when I'm looking at that, I'm looking and thinking, I can buy these stocks, and even if I go a bit too diversified, when we do rally out of the crash, like we did in 2022, and then we got into 2023, 2024, eventually when we do rally out, then that's when I'll start having all the profits, and then I'll start trimming down the portfolio and the positions and getting it into the right size. So last time we had the 2022 crash, you guys might remember I was buying like really aggressive into the UK market. And for example, I was buying things like Moonpig, for example, and then eventually I cashed that in for a 50% profit. I was buying stuff like Dart Trace, for example. I cashed that in for like 100% profit. I think we had like Hotel Chocolate that ended up getting acquired, and we made like 30% profit. So same again, now that all these prices are kind of down here, I think I'm quite happy to like go past where I might have too many positions, and then when we do bounce back out like hopefully out the dumps, then I'll just rebalance the position and go, right, I'll sell that one out, and then or that one might be acquired, and then that should naturally balance the portfolio out. So for example, if we were to come out of the bear market in a year or two's time out of the UK market, I'd probably look at the likes of Watches of Switzerland and go, not really bothered about holding that for the long term. Take the profit because it is a turnaround play. S4 Capital might naturally come out because it hasn't performed that well. I might look at the likes of Eurocell and say, right, the housing market's kind of recovered, I'll sell that one out now. So that's what might naturally go on. So even though I'm a little bit nervous about the big thing, that's one of the things that I'm processing as well before adding a new position, is that am I happy to add more in? Because I don't really want to add more in, but my thought process that I'm trying to get to is that I'll do what I did in 2022 because it gave me a lot of success in the market, and then we can just rebalance out in a year's time. But if there's so many opportunities out there and really good opportunities, I might as well go get them. So yeah, that's also something that I'm kind of considering in the background anyway. So yeah, we'll see what happens, and obviously you guys on the Patreon will know if I do pull the trigger on that stock this week. I've got a feeling I will, but we'll see what happens anyway. Hope you enjoyed the video, guys. If you could hit the like button, if you're new around here, subscribe. Thanks for watching, guys. See you in a bit.